It's time for Wise Money with Korhorn Financial Group with financial advisors Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of Wise Money with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thank you so much for being with us. My name is Mike Bernard. I am your host. I'm also one of the certified financial planners. Here with me in the KFG studios, as always, my friends and business partners, Kevin Korhorn and Josh Gregory.
Yeah, and we're just past the halfway point of 2019, so it's time to check in on your investments to see how things are going and really make sure you've got the right structure for the second half of the year as well. So our investment update and our insights on what's driving the markets coming up on today's show.
You know, we have another exciting update as well we're going to get to later in the program. Kevin Korhorn's fresh off a 2-week mission trip with his wife and daughter and several friends from Liberia. We're going to tune into that as well. But we want to talk about what you're thinking about. And everyone's thinking about the market right now. It's high, and there's risks, and there's an election. I think there's an election next year. I don't know. I'm not really political. But everyone's talking about this and thinking about it, so we're going to be talking about it today. If you have a question, and I know several of you have sent in questions, texted, emailed, and called in. Thank you for that. We've got a queue. We've got a list that we're going to be getting to hopefully later in the program. If you have a question, reach out to us. We'd love to help. 574-222-2000. You can call or text 574-222-2000. WiseMoneyRadio.com is how you find us online, and you can submit a question right there on the right. By the way, Wise Money Blog just posted a blog about what's going on in the markets. And so if you want a little more content about what we're talking about today, go to wisemoneyblog.com. And then all over social media, Facebook, YouTube, Twitter, Instagram, just search Wise Money Show. And even every episode's on podcasts as well. I know with summer vacations and traveling and all that sort of stuff. You know, and podcasts are just more popular anyway. People love listening to podcasts. I do. And so you can find us there as well. Just search Wise Money Show and submit comments and questions and like and rate and all sorts of stuff. Thank you very much. All right, here's my favorite quote, and it's the quote du jour when it comes to investing these days, and that is, at all times, the stock market seeks to prove as many people wrong as possible. How many people were coming into this year saying, oh, this is going to be turbulent and it's going to be awful? I kid you not. I first started hearing about the investor concerns of 2019 back in 2016. In 2017, people were saying, well, I know the stock market's going up right now, the election, whatever, but 2019, I hear, that's when it's going to really be bad. Now we're halfway through. It surprised a lot of people, surprised me, and we're going to talk about why and so on. But before we jump into those whys, let's hit the what actually happened.
Yeah, I mean, if you were trying to guess what area of the investment world was the hottest in the first half of the year.
It's been a hot summer, so maybe at least here in the
It
U.S.
took a while getting there, but it was actually real estate. Real estate was the best performer in the the first half of 2019, up over 19%, followed closely, though, by large U.S. stocks. This is the area that probably dominates most people's investment portfolios, and if the largest portion of your investment portfolio is second in line on great performance, it's been a great year for most investors. Up 18.5%, the large U.S. stocks.
Most people have just been gravitating towards more and more large U.S. stocks in their portfolio. They just, the way that we see it, and I would argue against that, even though it's the second best performer. But here again, we have more evidence that, yeah, certainly you would feel compelled to load up because international investments had a great first half, but they were only up 14.5%, and emerging markets up just about 11%. So there again, U.S.-based investments did a little bit better, which is, sort of extends its streak. International investments have outperformed U.S. just one out of the past 6 years, I believe.
Great performance in certain areas of your investment world cause you to just naturally overweight as well, just because they're growing faster than other areas. For example, if you have bond exposure in your portfolio, up 6%, which is a good, solid year for bond investments. We often think of those as more of your safe, steady, and predictable types of tools that help to diversify and help reduce risk. But In the first half of the year, boy, risk was your friend, and volatility that goes up is often welcomed, right?
But that is also strange because everyone would have said interest rates are going to go up, so watch out for bond investments. Bonds posted a positive 6.1% for the first 6 months. That's incredible. That's incredible. Small cap stocks came in at 17%, commodities positive as well, 5%. So quite a dispersion there. However, everything positive in the main areas, the main categories.
It's kind of unusual, isn't it?
Very unusual.
For every investment category to be up at the same time, that doesn't happen all the time. Also, it's not likely or it's not usual that everything would be down at the same time either, although it does occur.
And if we're looking, if we were doing this show a month ago, the market would have been barely positive for the year.
Yeah.
So really, what happened in June for the most part. There's a big lift in June in the markets.
You're right. If you just heard me clicking there, I was double checking something Josh just said. Pretty much all major asset classes are up, and as Kevin mentioned, that's pretty much happened in the past month and a half. Rarely are they down all at the same time. 2018 they were. The only thing positive in 2018 was cash.
Mm-hmm.
And so many people were surprised by that because everything was positive going into the fourth quarter. And then everything went negative. And so pretty crazy. One other thing I just throw out there, I saw this stat. I didn't get a chance to confirm it, but you know the internet's always right. This is the best first 6 months in the stock market. When I say stock market, that's U.S. large capital stocks, since 1997. Let me say that differently because to me, 1997 doesn't sound like that long ago. That's 20 years ago. That's 20 years ago. This is the best first 6 months in the market in 20 years, coming off a pretty scary fourth quarter.
Yeah, if you were going to survey investor sentiment, no one was thinking we would see the 6 months like this. But again, it's not the 6 months like this. It's the last month like this.
Right.
That's what you really point to. So you could have been 5 months into the year and looked at your May ending statements if you are a statement checker and been discouraged and said, well, you know, last year was a negative year and this year so far it's not doing much. And so I probably need to be thinking about moving to safety. And we've had those conversations. Mm-hmm. And if safety is congruent with your long-term plan, then absolutely you should be thinking about safety. But if that's not consistent with what you need to be doing for the long term, you need to stay the course, because the people that didn't stay the course are looking now saying, man, I wish I would have captured that. There are people that have been conservative since 2012, waiting for the other shoe to drop, and it just hasn't dropped. The Dow Jones Industrial Average, although that's not the market, but it started at 23.3 this year, and is at 26.8 at the end of June. So when is that time? And again, if you are a long-term investor, you're celebrating that. If you're short-term, if you're putting money in, you should be a little bit bummed out that the market's up.
Yeah, I think you're cautioning against going from growth to suddenly swinging back to the complete opposite end of the spectrum and trying to get too conservative. But it is important during these good times to reevaluate and make sure that you're not taking more risk than your long-term goals would require. Yeah. And that can naturally happen as time goes on. We get a little bit lulled to sleep on what risk really means in a portfolio, and there are many folks who are taking more risk in their portfolio today than they were a decade ago, and that may be appropriate for them, but then again, maybe not. And that's why it's important to pause periodically and reevaluate the portfolio, make sure it's still in the right position for you.
But how do you know right position for you? Is that based on your emotion? No, it's based on your financial plan. It is based on what your goals require, what your financial plan requires. We're getting ahead of ourselves. We still need to talk about what drove these results and then what possible themes are ahead. We're not forecasters. There's no crystal ball in the studio. Check YouTube. There's nothing in here. We're just talking. So we're going to talk about what might lie ahead for themes and then really driving it down to what should you be doing about it. So a lot more here to come on Wise Money with Korhorn Financial Group. All right. Okay, YouTubers, what do you think of the new microphones? We got to get the sound just perfect. We've got it matching the previous ones, but I can see you guys.
Yeah,
Feels
No.
good.
you guys look good. Hey, so Caleb's 529, one of his was at in May. It was at 27,164, and then it bumped up to 28,7. So that's $1,600 ish. And there were some questions. It's a long story, but there's some questions. So I said, hey, instead of if we end up paying for all of University of Michigan, we'll use some of that. And so I put it in cash at 28,7. And this is where I don't know if this is a story that we even want to share, because typically you wouldn't wait this long. If it's money that you might use this fall, you wouldn't wait this long. But
To get conservative with it, you mean?
Right.
Yeah.
But I actually wasn't going to get conservative with it at all until there was a question, and they said, "Hey, you have a scholarship, but you're not approved medically until you go through jump through all these hoops." So we had to jump through all these hoops. So in the meantime, we're like, well, we still have to live our life and make decisions. So we made decisions. But the crazy thing is I put $13,008 in that account, and I put it in cash at $28,800. So
More
that
than doubled,
$15,000 of totally tax-free growth, but the $13,800 came at 2% of my spending at a time. So that $28,000 just represents me swiping a card.
Yeah. That's incredible. So if you're listening on YouTube, what that means is they're still out there?
Yeah, Fidelity. You can get a Fidelity
That's what I'm
2%.
using, right?
I've got a
Sorry.
Fidelity 2%.
Sorry, Mike.
I did no. I do. I switched but I didn't see the 529 option.
Yeah, yeah. So,
You have to
So I've
set
got-
up the 529 at Fidelity, and then you link the two.
Oh, okay.
yep.
I
See?
think you can actually have that card pay into about any Fidelity
Mm-hmm.
account.
Yes, you can.
And I just chose the 529 plan.
Oh, well, I have it going into a trust account.
Well,
So
you're more sophisticated than
No,
that.
I'm not. That should be going into 529.
sounds like it should go into the trust account,
I
Mr.
want-
Rockefeller.
I want 13. I want 13 grand to become 28 grand for college.
I do too, Mr. Carnegie.
Yes.
Can I lower Kevin's levels
Yeah.
a little? Just
Sure.
Did you just? No.
We're muting you right now, actually.
Yeah, that's all right.
Go ahead, keep talking. No
You
one's
can't-
listening.
can't tease.
Lindsay, go ahead and double those levels if you would. Well, no, that's the beauty of that is a picture of dollar cost averaging.
Yeah.
Also, when I was talking to our friend who helps us with blogging and so on, we were talking about different scenarios, and we're going extra on our bonus content for YouTube, but the person who already got conservative, and we've helped people get conservative based on their plan, okay? So I'm not poking anyone in the eye, but the person who's just based on emotion has already gotten conservative. They're not doing what you said, Kevin. They're not sitting there thinking, oh, I wish I'd have been in. They're saying, it's going to go down even more now. Gee, I knew it. It's going to go down even more. And our brains are wired, or our fear, we have fear that thinks, well, the gains are temporary. But it's actually the losses that are the temporary thing. We were talking about someone who said that, well, that's great that you've had so much appreciation, but I've been conservative. I didn't go up that much. You're going to be sorry when it all goes down. Well, temporarily, you might be. But it's not the upside that's the temporary. It's the down that's the temporary.
Dude, you need to bring your microphone up about an inch. Yep.
Is that temporary?
Yeah, that sounds like 100% better.
Well, does it sound quieter if you guys could like turn it down a little?
I can't. I can't see your lips, but
That is that is impressive.
they tried to get one that would cover my lips, and wasn't possible.
I like it down a little bit because sometimes I'm looking down, I'm reading, and I slouch.
I know, but
anyway.
I'm telling you, dude, there is a
Sounds
huge
better.
difference between when you talk like this and when you talk like this in the sound quality.
Okay. All right. We need to get rolling.
Yep, time to go.
All right, so let's talk about what drove the first half, and then probably get into what we think will drive the second half. What should you expect in the investment world, in your investments, for the second half of 2019? We've got that and more coming up here on Wise Money. Thank you very much for being with us. My name's Mike Bernard, here with Josh Gregory and Kevin Korhorn in the KFG studios. Want to thank our sponsors, the attorneys at South Bank Legal. Thank you very much, as well as First State Bank. We've got an episode coming up where we've got, I believe, Darla from First State Bank is going to be joining us, talking about banking, what's going on in that world. So thank you very much for sponsoring the content. If you have a question, we're talking about investment, so I'm sure you do. If you have a question, reach out to us, 574-222-2000. That's 574-222-2000. Online, again, wisemoneyradio.com, also wisemoneyblog.com, and then all over social media, just search Wise Money Show. Facebook, YouTube, Twitter, Instagram, podcast, wherever you listen, all that sort of stuff. You can leave comments there. You can leave questions there. I'd encourage you to subscribe to it, like it, share it. Thank you, thank you, thank you. All right, so we talked about the performance from the major investment categories, but now before we get into implication, I want to talk about well, what drove that? So why did the market have such an incredible first 6 months?
You know, it'll be interesting to hear your perspectives on this as well, but I really attribute an awful lot of the growth to the interest rate environment, or at least the investment world's expectations of where interest rates might go.
See, Kevin, he agrees with me.
I didn't want to take a side this early, but
That's fine if you're both wrong.
here's the reality. Coming into the fourth quarter of last year, interest rates were a concern because things had gotten a little squirrelier. They were starting to get to the point where short-term interest rates were as high as long-term interest rates. And that's not really a natural place for the economy to be. In fact, some people point to this kind of upside-down interest rate environment as a precursor to recession. And the investment...
Some people say that. Actually, all of the data.
Well, I know, but a lot of
Not
people
all the data.
try to refute that,
yeah.
Go
right?
ahead and ruin the story
Like-
with the facts there,
like-
Mike.
Yeah. Like Kevin. So we're in this environment where investors are believing that it's possible a recession could be forecasted maybe a year or more out, and start clamoring for the Fed to start lowering interest rates. And the more data that comes out that would support that theory or support that request, maybe the more optimistic the market has become. The market all year has been essentially predicting that the Fed is going to lower interest rates, even in light of them saying, no, we're just going to hold interest rates. Maybe we'll be open to lowering interest rates. And now most recently, we're willing to do what it takes on interest rates. So the Fed's language has been changing, but it's been changing to more or better align with what the markets have been forecasting anyway. So I personally believe, not that you can point to any one thing, but if you look at the prolonged growth of this year, interrupted in May, I think it's the market pricing in the hope of an interest rate cut. That's my take. Your rebuttal, Mr. Corhorn.
Well, I don't think there's a snowball's chance that there's going to be a rate cut.
I agree.
And so I think in the interesting thing is the market is a leading economic indicator. So the market isn't telling us what's going to happen this afternoon. It's telling us what's happening this afternoon 9 months or 12 months from now. So when you look at that, you say, well, okay, it's predicting the future here. That's what the market is doing. And I just look at all of the reasons because I hear them from the folks that we serve why the market should be going down and why they come and share their worries and their concerns and their anxiety and tell me why it's legitimate. And you can't argue with it, right? You can't argue. Yeah, there's saber rattling happening with Iran. And are we going to go to war with Iran? What's going to happen? Who did what to whose ship? And there's all this crazy stuff happening there. There's a trade war happening with China, and China comes to the table and says, yes, we'll do this. And they say, actually, no, we won't. And there's huge issues with intellectual property in trading with China. And one of the things that is actually happening is a lot of the business that was the commerce that was happening between the U.S. and China is now happening in the smaller countries around China. And so all kinds of interesting things are happening. But you could, if you wanted to make a case and you could only read the news, but you couldn't see the stock market results for the first half of this year, you'd say the market's down 10 to 15%.
Oh yeah, absolutely.
Yep.
So
point.
if you just read the headlines, or even if you just read the news, you would make a case that with all of these things happening, and really when you look at this, the next thing that people are going to be screaming about is inflation fears. And another thing that we should all be paying attention to, that it seems like almost no one is the deficit.
Yep.
And so there are all these reasons why the stock market should be anemic at best, and yet it continues. Now, the interesting thing, though, when we look at that with some sort of perspective, and the story is best told in looking at small capital stocks. So stocks that have a market capitalization or value of their outstanding shares of $1 billion or less, let's say.
So still big companies. I mean,
Right.
these are big companies, but
Yeah.
in the grand scheme of things, considered small.
Yes. Big, yet small.
Yes.
So,
Glad I clarified that.
thank you. Okay, so I mean, so small caps are up basically 17% year to date. So from January to June 30, they're up 17%. But if you said from June 30 of this year to June 30 of last year, they're down 3.31%. So if you walked in a year ago and said, hey, Mike Bernard, I hear you on the radio all the time. I'd like to put $1,000 in just small caps because I'm a big believer in small caps, and I'm a dice roller, and I don't want any kind of financial advice. Just put.
I wouldn't do it, by the way. if
I
you're
know you
listening.
wouldn't, but your money's down.
Yeah.
I mean, this is the thing. If you
And you're shocked by that.
right, because you're
Probably.
saying, how in the world am I negative?
I keep hearing the market's at all-time highs. All of this is possible. Yeah.
Right. So it's interesting to have some sort of perspective to say, because we arbitrarily look at periods of performance, and today we're arbitrarily looking at the first 6 months. And I say, yeah, but if you took this and extended it and made it a 9 month, so it was a 3/4 update. That's not halftime; it's 3/4 time. But anyway, if you did that, no. Anyway,
Yeah. But
No, you would go back and you'd grab some of the negative months there. in
where
the-
it began.
That's
I mean,
right.
it really, what you'd want to do is go back to December,
24th was the
was the low.
absolute bottom
Yeah, but
of
if
the
you
market,
if you
Christmas
went back
Eve.
to the end of September, the market was up, and now you're basically back to where you were
Basically
in
even.
September.
yeah. So several things were hitting there. I actually do agree that the Fed and interest rates and all that's really driving the market a lot. I think connected to that also this recession fears. We were talking before the show that we actually have strong GDP. I mean, we'll see what comes out at the end of the month here for the second quarter, but we actually have had strong GDP even in the first quarter when they expected it not to be as strong, although stronger than a few years prior, and it came in better than that. But everyone is concerned about an upcoming recession, and I would just I've got to remind myself, because I'm emotional too, but I would just remind you, the point of investing is not to avoid recessions. That is not the way, that's not the strategy. So there's no way to predict when it's going to come. We haven't had a recession in 10 years. So that means it's potentially more likely that we'll see one here soon. I agree with that, but I don't know. You don't know.
You know what they say about generals? Generals are always fighting the last battle. And it feels like right now investors want to fight the last battle. We're in the longest expansion ever in the history of the United States. Economic expansion. Breaking the record of 120 months from March of 91 through March of 2001.
Yeah, it's incredible. Okay, so what should you be doing about it? Right? What's ahead? What should you be doing? Is it now a good time to rebalance? Should you get more aggressive? Should you get less aggressive with the market being so high? What does all this mean for you? We've got that and more coming up here on Wise Money with Korhorn Financial Group. It's fun.
Well, I think that probably needs to be resaid. Is that this is in its longest expansion ever.
I thought you were talking about like belts. Wait, that's why I clarified with.
I had an expansion starting in 1993. It went on for a record 240 months. So I think. I mean, the crazy thing is that the unemployment rate. I mean, this is the issue, is at 3.6% unemployment. That's problematic.
What do you mean?
It's for business owners, or
yes,
yeah,
yep. There's not. What that means, what that's telling us is there's not enough qualified people. I got this really cool thank you note from one of the guys that I coached in soccer. And he said, thank you. I don't even think I got him a gift. But he said, hey, I'm writing thank you notes, and I thought I would just write you a thank you note for all those years you coached. And
cool.
And he said some cool stuff, but he also said, thanks for giving me that really boring scanning job. Because he came in and scanned, right? But here's the thing. His skills aren't at this level. His skills are at this level. So the next place he goes, they're going to have to pay him more.
Yeah.
Mm-hmm.
He won. He won the game, right? Mm-hmm. The game is to get better and better and better skills. So, Anyway.
All right. So what's ahead and what should you be doing about it? We're starting the third segment. And then, maybe, that'll probably take the whole segment, but maybe we can then transition into talk about, all right, what else needs a halftime update in your financial life? If we don't get to it in the third segment, I think I'd rather do that than jump into questions immediately. So, okay.
But that won't take the whole fourth segment either way, right?
It shouldn't.
Well, and I have, if you still want me to share, I've got stuff that I can share in the fourth segment.
Let's hit yours right now. Let's hit
right
yours
now.
Yeah.
Okay.
Yeah.
And then I don't know if you want to mention something, but the 25th anniversary of KFC.
Yeah, when is this airing? On the
20th.
On the 20th. So yesterday was our big celebration, right? 19th.
Word.
Okay. What should you be doing with your investments right now, with the market doing everything that it did the first 6 months, after what it did in the fourth quarter of last year? What should you be doing with your investments? That is just ahead here. This is the Wise Money Show with Korhorn Financial Group. Thanks for being with us. My name is Mike Bernard, coming to you from the KFG studios. Across from me, Kevin Korhorn. As always, between us, Josh Gregory. Thank you to Bethel University Adult and Graduate Studies, as well as Diane Bennett and her Inspired Homes team of realtors serving Michigan and Indiana. Thank you for your partnership. If you have any questions, reach out to us. wisemoneyradio.com is how you find us online. Submit a question right there on the right. All of our social media, YouTube, Facebook, Twitter, Instagram, podcast, all that. You can You can submit questions that way, comments there as well. Just search Wise Money Show. And then, of course, you can call or text 574-222-2000. A lot of people text their questions in. So you can do so, 574-222-2000. All right, we've got a couple exciting announcements or updates, if you will, before we dive into what you should be doing with your money right now. And the first is happy anniversary
Happy anniversary to both of you.
to
And you as well, my friend.
to Korhorn Financial Group. We on July 19, right?
That's right.
1994.
We celebrated our 25th anniversary just yesterday as a company, and really that dates back to, Kevin with his vision and dream and ambition getting things started. So kudos to you. It's very exciting.
Well,
And-
I would love to take some credit, but I can't really.
Yeah.
The only thing I can look at is that we have been blessed.
Absolutely.
And it's a tribute to just putting your left foot in front of your right and trusting God that He's going to do what only He can do, and He has. And it's also a tribute to the many, many people that have come to serve the folks that God brings to us to serve. And it has been an amazing run. And if you would have told me 25 years ago this was possible, I dreamed it was, but I wouldn't have believed
I was
it.
going to ask you that. When you started your career as a financial planner in 1994, were you believing that was the start of a growing business, or was it just a start of a new career possibility for you?
Well, if I go back 25 years ago, it's kind of funny, not funny. I was basically almost a year into being married, a year after I graduated. This was my third job because I had worked at Camp Rayburn and realized that wasn't where I was supposed to be. And then I went to work at a meatpacking plant with the goal of just bringing home more money every 2 weeks than my wife did, who is a teacher.
Always the competitive nature right there.
Well, I needed just a little overtime every pay period to do that, and I thought, okay, well, that's what I want to do. And then I was just kind of praying about what am I supposed to be doing. God said, well, use your degree, and my degree was in finance, and I wasn't really interested in the corporate world because I'd been in the Army and I saw what a bureaucracy looked like. And so as I got started 25 years ago, I remember that time because there was I wouldn't call it a fear, but I didn't really know what I was doing, for lack of a better word. I mean, I was trained and I knew how to serve people and help them financially, but it was sink or swim. That's the model that I came into. I didn't really come into a profession. I came into hey, if this works, great, and if it doesn't, we're going to take all these folks that you've started with and give them to the big guys in the office. And so it was probably the first 3 months I would spent, especially in the morning time, I had gastrointestinal issues.
Oh my goodness!
I don't know how else
I've
to
heard
say
this
it.
story before.
But I
Didn't
know,
expect to hear it. here.
no, I know, and so there was this nervousness, and I've never really been nervous. I've never been a fearful person. I've never been an anxious person, but I was looking and I was thinking, okay, this is my third job in a year, and what is this? Am I getting prepared for my fourth, fifth, sixth job, or is this what I'm supposed to do? And I remember there was a time when, probably about 9 months in, when I realized, hey, I can make it. I can make it doing this. Now the question is, do I want to make it doing this? Do I love this? Am I passionate about this? Because I knew myself well enough to know if I wasn't just absolutely on fire passionate about something, it just wouldn't work for me. And
Well, and I've watched your passion for financial planning really explode over the most recent years, even But when I look back on, I've gotten to observe 18 years of your 25-year career here, and you've always been an amazing financial planner, but also I've gotten to observe your growth as an entrepreneur and as a business leader. And I think both of those, you've become even more a student of the game as a financial planner, but also studying leadership for years and years and years, and that has accrued, that has grown, and Korhorn Financial Group has benefited from it. So it's one of the reasons why I always love this time in the studio, because we get nuggets of that wisdom coming out
Yeah.
on a regular basis.
But to answer the question, I could close my ears, my ears. I could close my ears too, but I could close my eyes 25 years ago, and I could see a firm that could really, really effectively serve people that were really busy. And it's typically people that are really busy that have money, and they want to be busy making money, not busy figuring out the many, many different ways that they need to steward that money. And so I could see a multidisciplinary financial services firm that worked in the financial world like Mayo Clinic works in the health world, where you were a total solutions provider and you could serve people.
One of the things that I was just thinking about over the past 25 years also, though, is to kind of pull this back to the theme of this show, what's going on in the markets and everything. You think about how many of the 25 years that Korhorn Financial Group has been in existence, how many of them have been positive years in the market versus, a handful of negative years.
Yeah.
And yet there's always uncertainty. And, you have 25 years of perspective looking back on walking through those ups and downs in the market with clients. And even though most of the 25 years have been positive, they've all had uncertainty in them. And it's interesting to be kind of ushered into someone's life and help them navigate through that uncertainty.
Certainly. All right. So what's ahead? What's ahead for what's going to drive the market the next 6 months, and what do people need to be doing about it?
Well, I think to be an investor, you have to have a plan and stick to the plan and not really care about what the markets are doing. Because if you would have looked at September 21st of last year, your investments would have been up 15%-ish, and you would have been really happy if the year would have ended there. I think if we could have ended the year June 30th of this year, you would say, okay, my investments are up double digits. I'll take that. It's kind of like, although I'm not a gambler, I'm imagining being in a casino and saying, okay, I'm going to take my chips and walk out now and cash out. But we don't get to. We have another half of a year to live. So the 18.5% that large U.S. stocks are up could be 18.5% at the end of the year, could be 38%, could be minus 10.
Yeah.
We have no idea. So because of that uncertainty, in times of uncertainty, you seek wisdom. And wisdom says you have a plan, you have a structure for your investments, and make sure you're exposed to the right asset classes and let the markets do what they're going to do.
Oh my goodness, I completely agree, and actually want to expand on that, because it feels like a time where people are gambling. When you look at, well, will the Fed lower rates? That's a gamble. Will there be a trade deal? That's a gamble. What's going to happen in the election? That's a gamble. No, take the gambling out of it. This is investing. What's your plan say, and be disciplined with that plan. Gosh, all right, we've got more to come. Coming up
said.
here on Wise Money with Korhorn Financial Group. That's great. That was really good. Something you said right before that, though, also got me all pumped up. No, we'll pick it up. I want to pick it up with Liberia, but I didn't want to tack that on, because then that would have been the whole segment. And so, I don't want to squeeze it, but try to keep it to.
Yeah,
a minute or
that's
two.
that's a shorter one. That's a much shorter.
All right.
Sorry, and I was trying to pull a little bit of the story out of you, not thinking that it really should be the whole segment, but You only reached the 25-year mark once, right?
I was thinking we're
It's a huge milestone.
a month and a half away from a show anniversary too, so we could tuck it back in. I mean, we can bring this back up about the company anniversary as we talk about the show anniversary too, and we can re-say or say more in a month and a half. So, and I got an email. Are you on email? I'm not looking at you, YouTube. I'm looking at our producer.
Are you on email?
Okay, so the thing I did with Diane is going on today, 9:30, and then TJ's got most of the stuff, and so we want
For the
everything.
studio, you mean?
We want everything installed 3 weeks from now,
Sweet.
so that
Here, I thought I was the only one that did email during the show.
Wow.
so yeah, so that's good. All right. This might be the whole segment. We'll see. About what should you be doing about it, and then what else needs a halftime check-in. I think that's probably the full segment. So, landing the plane.
Great.
Thank you so much for being with us. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. Here with me in the KFG studios, Joshua Gregory and Kevin Korhorn. If you've missed anything, this is our halftime investment update. You know, sort of think about the football game where you've come out, you've played the first half, you go into the locker room to say, all right, let's regroup. What just happened? How do we need to change the game plan to go out and execute well in the second half? That's what today's show is all about. There's still quite a bit more to come that we need to talk about. If you've missed any of that, though, I would point you to two places. And the first would be the YouTube channel. Just search Wise Money Show on YouTube and do me a favor, subscribe to it. Hit that little bell down below as well so you're notified every time we drop new content. And then you can comment there, you can share, you can thumb it up, you can thumb it down. Honestly, I'll just go ahead if you don't like the content, but just leave a comment as to what you'd suggest as well. And so that's the first thing I'd tell you to do. The second thing is wherever you listen to podcasts. I personally do iTunes because I've got Apple phones, but it doesn't really matter. Wherever you listen to podcasts, search Wise Money Show. You'll find our podcast, subscribe to it, and then do me a favor and rate it, actually. That really helps us, and it helps others, more importantly than helping us, it helps others who are looking for content about wise financial principles. There's a whole bunch out there, a whole bunch, not about wise financial principles, about Bitcoin or about the investment du jour or whatever, and hopefully wise financial principles is something that more and more people need to be hearing about. So I'd encourage you, like the show on podcast and rate it there as well. You can also leave questions. I go into wisemoneyradio.com, submit a question right there on the right, and you can even call and text in 574-222-2000. That's 574-222-2000. All right, we had a little PSA in our last segment, and there's a little bit of one. Kevin's fresh off the plane from an awesome mission trip in Liberia with his wife and daughter and a couple others. So a quick highlight, or how'd it go, Kevin?
It was so we were actually there for 2 weeks this time, and we went with a group out of Muncie. The church is Harvest, and the name of the group is Hope 2. And it used to be Hope 2 Liberia, but they actually are serving all over the world. So
Not going to limit themselves to
they're
Liberia.
They're not limited
That's
to
awesome.
Liberia, but they've really done some pretty amazing things in Liberia, and they have about an 8-acre compound with a guest house and with a facility to take care of groups and a school. And so we were able to spend a good amount of time at the compound and in the school. We brought some pretty amazing technology to the school, and it's amazing. I watched my lovely wife, who is a first grade teacher, sit with a woman who was in her 50s, and it took Lori about 5 hours to teach her 2 things on the computer.
Wow.
One is how to drag and drop, and the other is the space bar. and what happens with the space bar.
Wow.
And so you
Stuff we totally take for
we
granted.
totally take for granted. I was able to work with Sam Risley, who's the pastor at Harvest in Muncie, with a group of churches, the pastors from churches that we've planted. And we went through the book of Philippians, and I was reminded as I read through the book of Philippians again that Paul wrote that from prison. And it's a book on joy, and so I kept thinking about what would the letter that I wrote from prison look like. It would be
Probably wouldn't be encouraging.
get
right?
me out of here.
Woe is me. Wow.
Right, and not praying for and. I would be praying for deliverance. He prayed for endurance. So, anyways, it was great to go through Philippians with the pastors and see them really soak that up and be encouraged by it. And our Liberian brothers and sisters know how to suffer. There's been no shortage of suffering, and really one of the poorest countries in the world and one of the most corrupt countries in the world. And so it's a very strange and yet wonderful place to be.
All right, let's transition back into really what you need to be doing right now in your portfolio with the first 6 months done, the next 6 months of 2019 ahead. Guys, what do you need to be doing?
You know, we commented at the very beginning of the show about how amazing the growth has been in the first half of the year, especially in the stock market based here in the U.S. So that's large or small size companies. This could represent a very large portion of your portfolio right now, and it may even represent a bigger portion of your portfolio than it needs to be. And so within the context of whatever goal it is that you're trying to achieve, I think it's important to stop and recognize how much growth do I need out of this portfolio over the coming years or even decades. And let that be your timeline that you're evaluating your portfolio on. And it's probably a time most people need to be rebalancing their portfolio.
Yep.
That might mean trimming back some of those amazing winners and buying the stuff that's still more relatively cheap. Buying what's lower after selling what's higher. That's what rebalancing is, and it's really one of the most disciplined things that you can do as an investor. And I think now's the time to do that if you haven't done it in a while.
We have a disciplined approach at KFG where we do that a few times a year, and we just did it. We just rebalanced all of our client accounts to snap things back to the right allocation. I would expand on what Josh said a little bit. You're talking about focus on when you're going to the next 20 years or long term or whatever. And I would actually say it a little differently and say, now is a great time to look at your time horizon.
Sure.
That one often gets kind of swept along with the other, your risk tolerance and your investment objectives in time horizon. And time horizon is critically important right now. Any money that you're going to need in the short term, it shouldn't be invested for the long term.
Right.
Right? I can't say it any better than that. So what money do you need in the short term? And be disciplined with that. What money do you need in the intermediate term? That shouldn't be invested for the long term either. And then what money is long-term money that you won't touch for the long term? And despite what your emotions might tell you and what the headlines might say, it should be invested for the long term.
Yeah, if you said, what should I do today? Today, look and see if you have any 529 plan money that you're going to need this fall for your college student or your high school student or your K-12 student, and get that money. If it's invested, get it out of the market into cash. Be careful because there are lots of rules on how much and how often.
You can only make a change to your 529 plan investment mix once per year.
I think they might have changed it to twice a year, but it still is limited.
I think it might be twice a year, but
I think you're right.
I have to reference that every time because it doesn't stick. But so do that, but also take a peek at your financial plan. Are you ahead? Are you behind? Are you right on pace? And you should have a great answer to that. If you don't, you need a plan. So find a planner, make sure they're certified, make sure it's what they do. Not just someone who will sell you investments, but find someone who does certified financial planning and make sure that your investment mix fits as a piece of the puzzle into your financial plan.
I'm so glad that you took this particular episode, which is about investments, but you brought us back to financial planning. And, you know, another financial planning theme or a task, a responsibility, you could say, is also reevaluating your budget. Some people set their budget and just kind of forget about it. If you're not at least reevaluating where you stand on a monthly basis, I hope that maybe at least on a quarterly basis, you're looking back at the data and saying, okay, I thought I was going to spend in this area. That was my intention, but what has reality been? And maybe there's some adjustments that need to be made within your cash flow over the next 6 months. That's important because you have to maintain margin so that you have saving capacity for any of these long-term goals we've been talking about.
All right, so here's what I heard that you should. Now's a good time to rebalance. You've got to tune into your financial plan to see if you're taking the right level of risk for your plan. You've got to tune into your time horizon to see what you need in the short term and intermediate term and invest it appropriately for those time horizons. And then I would also tell you, find out what your investment strategy is. Now, we've got some that pivot, that are dynamic, that aren't static, but some people do that on a whim. Try to make some quick changes with just emotion. Find out what your strategy is and stick to that strategy regardless of the short-term news headlines or what's going on in the market. So, all right, that is all the time we have for today. Thank you so much for being with us. On behalf of Kevin Korhorn, Josh Gregory, and all of us at Korhorn Financial Group, have a great weekend. We'll see you next Saturday for Wise Money with Korhorn Financial Group.
And for those friends who are watching the YouTube channel, make sure to subscribe and like and download and share. It really helps us out.
Yes, thank you very much.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.